All right, so before giving you the example, I want to show you the market maker buy model as well, a depiction of it. So similarly, what you will have is you will have your POI right there. So you can see there's a POI, and once price comes into your 1 hour, a daily POI, you want to drop down to the 1 hour time frame, right? Once you have like once price comes into your POI, right, you want to start identifying or sniping or scouting the original consolidation. So when was the first consolidation before price started moving towards your POI, right? So if this was the consolidation, right, I will show you how to identify them. Don't worry, I'll show you the examples, tons of examples. So then that would be absolutely clear. But you simply look for a consolidation phase 1 and then a consolidation phase 2. This one is not necessary, but it is gonna, as I said before, it's gonna make your win rate even higher. Price comes into your POI. Now remember the time frame alignment from daily to 1 hour to 5 minutes. So once you get a market structure shift, your bias or like your setup is gonna be like officially active, okay? Because you have a market structure shift. If you don't have a market structure shift, you are not doing anything, but you're just identifying the consolidation, right? You're identifying the market maker buy model. But once you get a market structure shift, one simple thing, you enter from here, right? And try to target these levels. However, you don't have to hold till here because we don't know what's price gonna do, right? We are just only putting the probabilities in play. Like we have high probability, of course, but price can simply take out, like let's say this high over here, this consolidation, and then reverse. So you have to take partials along the way. You have to trail your stop loss, or you have to go break even at some point. It all depends on your trading style. So remember the mitigation blocks, right? If price gives you an entry, right, you can take longs. So if there's a fair value gap on auto block inside this mitigation block, which is an old auto block, a bearish auto block, you take your entry from there. Let's say price breaks through this level, this mitigation block, there's fair value gap on auto block inside here, you take entry from there and you go there. Simple as that. But once you get a market structure shift, right, you want to mark out this range low and this range high. So now once price comes into your 1 hour POI, you drop down to 5 minute time frame, and then you start looking for consolidation on the 5 minute time frame around here, the original consolidation, right? And then let's say you have another consolidation and price came into your POI, right? You then look for a market structure shift on the 5 minute time frame once again. So that's, let's say price comes into your 1 hour auto block or any POI. Oh my God, let me disable this arrow, bro. It's making the chart so messy. So on the 5 minute, let's say price comes into the 1 hour auto block or POI, you get a market structure shift and you have the original consolidation with a second consolidation. You take your entry and I bet you it's going to hit the take profit. It's really that simple. I mean, it's a little complicated, but I'm going to show you the examples and then it will become very simple for you.